Hello, oracles. As we go into a time where the Fed is about to start cutting rates, we've been seeing a lot of volatility in the market. We've seen spikes up and down, and we are going to be going into an election season with even more volatility. So, who do you look for when you're looking for investing advice? What analyst is going to give you the information you need to know for your different trading style? Well, the absolute best analyst that is out there that is going to tell you everything you need to know about your very specific investing style and your portfolio and your goals is you. You are the number one person. You are the number one analyst that is going to tell you what you need to know for investing. Now, I fully understand that some people may be newer to investing and you're like, well, how can I possibly analyze anything myself when I don't know anything? That's just it. Warren Buffett himself had said one of the best things you can do to improve yourself is educate yourself, read books, learn new skills. That is going to help you improve your own personal value, which means that you can make more money on your value going forward. Well, the same holds true in the investing field. Whether you're investing in stocks or real estate, or whether you're going to be playing options, or you're going to be investing long term, or you're going to be doing dividends, or maybe you're swing trading, whatever you want to do and what is best for your investing style comes down to your own education. Educate yourself on whatever style it is. For me personally, I started with some swing trading. I learned a lot. A lot of it is going to come from experience. A lot of times you're going to be spending money by losing money in the stock market just to gain that experience. I definitely did that. I lost a lot of money in the stock market, just kind of learning my own style, learning what is the right investing style for me, and just kind of learning how to understand and value stocks, looking at companies and value these companies, looking at far as, hey, I'm more of a long-term investor than I am a swing trader. Yes, I can swing trade, but for me personally, for me and my emotions, it's more about the long-term investing. A lot less emotions are involved with that. Now, with that said, I am looking to get into some options. We'll get into that at a later video, but for me, when it comes to the trading options, there's a strategy I'm using which kind of goes along with my long-term investing strategy, and that in by itself is going to kind of keep my emotions down. There's really kind of an emotionless options trading strategy for that. But again, I'll get into that in a later video. So, when it comes down to it, if you are going to be the number one analyst, where are some places that you can look to educate yourself? Well, obviously, look to some people like a Warren Buffett. When I look at other analysts that are out there, looking at them and the information they give, it's not a bad thing. It's not bad to look at analysts, and you want to look at them on both ends of the spectrum. Look at the bulls and look at the bears. Look at the information that they're giving you about the company. When I look at these analysts, a lot of it is opinion that is going to be based on the facts that they are reading and how they are interpreting those facts and their numbers. And it's also going to be going what their feeling is about the company moving forward. Price targets to me, and I used to put out my own price target for Tesla stock, and I'm not against price targets entirely, but I kind of think that they're useless. Nobody knows where the stock price is going to go. Nobody knows where it's going to go tomorrow, next week, next month, and a lot of these price targets are 12 months out, and they constantly change them over the course of the year. So why bother even looking at these numbers? Because if you're going to invest based upon what somebody else thinks they're going to see for a price target in the future, you're not investing properly. You're not investing in the company. You're investing in somebody else's thesis on a company. So looking at the data and the ideas they present forward are good to look at because they might see something that you don't see yourself in the company. But when it comes down to it, the most important thing you can do is learn how to read an earnings report. Learn how to look at a company's earnings, learn how to understand a company's metrics, whether it's going to be sales metrics, units sold, whatever it's going to be, whatever that company is that you're investing in. What are the numbers? Average users, sometimes, for instance, like a Disney Plus streaming strategy. If you're looking at things like that, what is the metric, the metrics that you want to look at for a company, and are they growing? Learn how to understand that. As Warren Buffett says as well, go with your core competencies. Look at something that you actually understand. Go with a business model that you understand. Maybe it's a business that you currently work in, but it's a different company. It doesn't matter. If you understand that business model, that is one that you want to go with. That is a core competency. You can absolutely learn more of them, but stick with that one first. Only invest in things you understand. Me personally, I've been a retail manager for almost 20 years now. I understand retail very well. I understand how to read P&Ls, that's profit and loss statements. I've even created my own for my own personal finances. So when I look at different things like that, I can easily go and take a look at any retail company that's out there and know exactly what I'm assessing. I invest in Home Depot. I invest in Costco. Companies like that are things that I feel very comfortable reading their earnings reports and understanding where that business is moving. I understand how the customer flow is going to go. I know seasonality behind all of it. I know, like, when it comes to Home Depot, looking at the construction side of things, because I'm actually in construction retail, I know the seasonality. I know when the government's going to be giving out different money to different areas, to different places. I know where the housing market is with all of that because I'm also investing in real estate. I am very comfortable in understanding how that business works. So that's why I invest in that company. So when it comes down to it, make sure you're looking at your own core competencies. Now, if you're going to be a long term investor, those are the things that you really want to look at, because you're not going to be investing in a company, for next week's or next month's price movement on the stock. You're going to be looking at a company whether they're going to grow long term. That's when you really want to be able to understand how to value a company by looking at their earnings report, looking at their metrics to make sure that they are growing in the direction you want them to grow. So much like stress free, I want to say, but maybe not stress free, but like a much lower stress investing strategy, because it's a long term thing. You're like, all right, well, I'll just go earnings report to earnings report, making sure the company is growing, understanding the challenges that they're facing, understanding, hey, they're facing some challenges right now, but they're going to get through them. So if the stock price is going to come down because of it, I'm going to get myself a nice buying opportunity. So that's my strategy. That's what I've taken on for myself, because that's what I am comfortable with. I can assess a company with their earnings report, see the valuation in them, come up with my own mental price target per se, but I don't even come up with the price targets. I just want to make sure, is the company moving in the direction I want them to move to? Are they growing? What is the pace of their growth? Is it growing as fast as I would like them to? And then just go from there. That's really it. As long as we're moving forward and making progress, I am happy. Then you've got some people like my father, who's a swing trader. He does a lot of swing trading here and there, something like that, where you want to look at sentiment of a stock, understand how the sentiment in the market works. Read up on that, figure out how that works, understand, what's going on with the macro environment and company specific news. How is that going to move the stock? Should I buy now? Should I sell now? Little things like that to understand how that's going to move. It's still important to understand the valuation of a company, because if you're going to be swing trading, you just want to make sure that what you're investing in is still a value that you're looking for. Now, it's not going to be as valuable, because if you're swing trading, momentum and sentiment are going to play a lot bigger roles in it. And another thing to look at too is understanding how stock charts work. This is something I've discussed a lot in the past when it came to Tesla stock, as when you're an investor, stock charts truly mean nothing. If you're just a long-term investor, who cares what the chart says? As long as the company is improving its value and the company is growing its earnings, it is going to naturally move up over time. So you're going to have bumps here and there along the way, but it's going to be moving up over time. When it comes to swing trading, following those charts could be important, because there's a lot of key different levels and indicators that you can look at that can give you an idea of, hey, the stock is probably going to hit this level here and then come down. So that might be a level to sell at. And then it's coming down, and here's a nice level of support down here. That could be a nice level to buy at and play those swing trades in between. My dad has a wonderful strategy for himself. Not to say that it's stress free, but he kind of puts it at a perspective of, he has no emotions involved in a stock. He finds a company that he thinks is at a good price. He buys it at that price, moves up for him. He sets a limit on that. When it gets to a certain point, he puts himself a sell limit in there. And when it comes down a certain percentage, it automatically sells off. That's it. If it goes up after there, all right, no big deal. He still made his profit. He moves on to the next one. That's how he does it, relatively stress-free, and he's been very successful with that. There's a video I've done in the past going over that entire strategy, and if you guys would like, let me know in the comments below, and I can break down that strategy for you as well if you're looking to get into some swing trading as an option for yourself. Now, speaking of options, that's another one. It's kind of like swing trading on steroids. You've got a lot more volatility involved. Me personally, I don't like margin. If you want to get into that, that is really high level steroid type stuff that is very risky. I do not recommend it, especially in the kind of the situation we're in right now with higher interest rates and a lot of volatility. Now, volatility is good for options, but if you're looking at margin and how expensive it is, maybe not so much. But again, you know your own risk tolerances, so you have to do what is best for you in your own portfolio. But options, there's a lot of things that are out there, and educating yourself on how to play options would be very valuable for yourself if that's something you want to get into. So looking at options trading could be good. It's a way that a lot of people make some extra money on the side to kind of feed their entire stock portfolio. Again, this is something I'm going to be looking into. One of the ways I'm going to be looking at is either covered calls or cash secured puts. I'm not really a big fan of shorting. I know some people do some shorting as a hedge, but for me, I like to do the long-term investing, and a cash secured put is a good way to do that. Is like kind of like setting a buy limit for a stock or an ETF that you like that's out there, saying, hey, I really like it at this price. But instead of just setting a buy at that price, you play it with an option. You go to buy it with an option at that price, and you're going to get paid a premium on top of it. Now, when it comes to a cash secured put, if it comes down to that level, you buy it at that level. Awesome. And you're going to collect the premium. You've now owned that stock, which you wanted to buy at that level anyway, and you made a little extra money on top of it after that. Now, if it comes down below that, so be it. But you were buying it intentionally, or at least I am when I do it. I'm buying intentionally for a long term play. So I liked it at that level. If it comes down lower, so be it. Maybe I play another option on it after that. We will see. The only way you actually lose out is if it does not ever come down to that level and it runs really high from there. You missed out on that buy, you missed out on the upside, but you still collect that premium. So that's the kind of the way I look at it. And for me, I'm doing it where it's like it's going to be an added bonus to my position that I have on that stock. And it's not like I'm looking to get into the stock at that level. So for instance, if I was going to play like SoFi for whatever it is, if I was going to do a cash secured put, I already own 50 shares of SoFi. So if I'm playing an option on that for another 100 shares and it runs from there and I miss it, no big deal. I still have my 50 shares on the side, and it's a volatile enough stock where I think I've got some more opportunities as well going forward. But that's just another thing to pay attention to and another thing to learn to become your own best analyst. And then the last way, just from an overall macro standpoint, is understanding how the macro environment works, because it's going to affect every single one of your investing strategies regardless. So if you're looking at something from a macro environment standpoint, for instance, the Fed looking to be cutting rates in September, some people are thinking it's a 25 basis point, some people think it's a 50 basis point. Either way, the Fed is going to be cutting, but how do interest rate cuts and hikes affect the entire market and affect the entire economy? You look at things like the Fed taking money out of the market, the M2 money supply. Very important to understand how that works when it comes to the entire market, because whether you're long term investing, options trading, swing trading, either way, it doesn't matter because it's going to move the entire stock market one way or another. And if you're swing trading, it could move it even more in that shorter period of time. If you're long term investing, you start seeing the position that we were in 2022, Fed hiking rates. We got some great buying opportunities for long term investing. You start looking at the fact that the Fed's going to be cutting rates soon. That could be good for long term if the rest of the economy does well, if we don't get into a recession. So learning and understanding how to follow data that's out there, like the jobs report, is very important to understand how that's going to go. Understanding how elections are going to affect the market, whether you get Kamala Harris in there, and we're going to looking at, more tax increases for higher end individuals and corporations, or if we get Trump in there, who is typically better for taxes, and maybe the market's going to do better. Doesn't matter. You have to understand how both of those could potentially play out. I'm not on one side or the other per se. I just kind of understand that, when one's going to happen, something's going to happen in the market, and just understand how that's going to affect the market overall. And then, of course, you look at things like recessions. If we are going to get into a recession, what companies are going to do well during a recession? What companies could you be swing trading well with a recession? What companies are going to be great options plays during a recession? These are kind of things to look and pay attention to as well during those times, because regardless of whether we're in a bull market, a bear market, or recession, either way, there's always opportunities that are out there if you are prepared. And again, when it comes down to being the absolute best analyst for yourself that's out there, be prepared for opportunities. Something I've constantly talked about over the last few years is being ready, being an agile investor. And in order to be an agile investor and take advantage of whatever the market is going to present you as an opportunity, you have to have cash on the sidelines, cash flow coming in, and just the ability to recognize what is transpiring in the market to take advantage of those opportunities. Like, for instance, if you're a long-term investor and you're like looking for an opportunity to get into a company and you say, "Ooh, I like that one and it came down 10%." Well, that's great. But if it's already up 80%, is that 10% really a good entry point? Or looking at the entire macro environment or the company in particular, could there be a better opportunity in the future? Now, again, nobody knows for sure when it's going to be. And if you're a long-term investor and you think the price that it's at right now is still going to be a good buy, 5, 10, 15 years down the road, whatever your investing horizon is, maybe it's a buy for yourself. but only you are going to know the answer to that. And again, taking in as much information from the outside, from other analysts and their perspectives, people like Warren Buffett, who are out there, kind of obviously one of the best investors ever, looking at other companies like that, listening to the CEO, listening to earnings reports, actually listen to the earnings call and figuring out what's going on there. What is the company telling us? Do I like the leadership that's over there? Do I like the direction that they're taking the company? Reading earnings reports to understand the entire breakdown of their financials. Learning all of these things are going to make you a much better investor, and that will be the best analysis you can possibly get from anyone that is out there. Only you can be that person to be the number one absolute best analyst for you. So, my number one piece of advice is educate yourself as much as you possibly can on everything, and then figure out what it is your investing style is. Whatever your investing style is going to have even deeper research that you can go into. Sort of like when you're going through, school itself, there's basic education that you go through in elementary school, then you kind of take it to the next level in middle school. High school, you kind of fine tune a bunch of those things. And then when you get to college, you're like, all right, these are the things I really want to study. And then you can dive deeper into it, and you go even deeper as you go through college after that. So it's kind of the education system that you go through for yourself. It's all self education, figure it out, take in as much as possible. Lots of YouTubers out there doing a lot of this. One of the places I look at is Seeking Alpha. Now, I'm not an affiliate. I know a lot of other people out there are affiliates. I even use just the free version of it. So especially if you're new and you don't have a lot of money into the market or a lot of money to spend, and you would rather put that money into your investing account, the free version still provides you a lot of good information. For me as a dividend investor, I'm looking at dividend history, making sure they're growing their dividends regularly. I compare the total return to the S&P 500. Is this stock in this company notoriously beating the S&P 500? You can see what their growth rates on there as well, even in the free version. So I'm not an affiliate. There's no link down below, but I would recommend checking out just even the free version of it. And if it's something that you guys like, there's a lot of extra benefits from the paid version that I have seen that other people use. Perhaps if you're really into it, you've got the money and you want to spend it to get even deeper information in there, you can definitely go ahead and do that. But I highly recommend Seeking Alpha out there as well. I definitely recommend the articles as well. The articles and the comments within the articles are very important because you're going to get even more analysis and perspectives in those areas to kind of get the feedback that you want to really truly understand the companies that you're investing in. So as far as resources go, that's one of the places, obviously the internet, just understanding the companies' earnings reports themselves, looking at all the earnings releases when they put them out, reading through the entire slide deck, understanding the 10K when they put that out, annual reports, all of these different things that you can do for yourself to educate yourself. Because if you don't do that, that is not doing your own due diligence and research to figure out what you're investing in. And if you just go by what other people tell you, it's really no different than if you're watching mainstream media to tell you how you should feel about what's going on in the world around you. Understand and learn how to do that deeper research, and you will find out that you are a much better investor going forward. So that's all I've got for you guys. Let me know in the comments below how many of you do all of your research and where do you do it? Because in the comments below, if you guys read that, you'll